Well, thanks for tuning into this special coverage about Reliance Industries results. The Q4 numbers are out, the yearly numbers are out, and on the face of it, there are more minuses than pluses on these numbers. Jio numbers leave a bit to be desired. I believe the ARPU numbers leave a bit to be desired, even though the overall numbers seem to be maybe marginally higher than what a few brokerages were estimating. But Soumeet is here with me to put all of this into perspective. Then we got Deven Choksi and Gurmeet Chadda for their expert opinions. Gentlemen, just thanks all of you for taking the time out and being with us. Soumeet, to you first. What do you make of the numbers?
So I'll start off with the Jio numbers first. Now, if you see the revenue, now they have come a bit below than what the analysts were expecting, and that is because of the lower ARPU that the company has generated. Now, analysts were expecting the average revenue per user to be close to 129 rupees, but it has come in at 126 rupees. The EBITDA of the company, now that has come at around 4,326 crore, and the margins, now that have also remained largely stable at 39%. Net profit number has also come in below estimates at 840 crore rupees. Analysts were expecting the number to be close to 973 crore rupees. Now, if you see the standalone business of Reliance Industries, now that has the performance on that side has been largely stable. The EBITDA has come in at around 13,700 crore rupees. Analysts were expecting a number to be similar, close to 13,690. So that's in line with what the analysts were expecting. The margins have bumped up again. It is around 16.4% in the fourth quarter, as against 14.5% reported by the company in the last quarter. Now, the net profit number, now that has come at around 8,556 crore rupees. Analysts were expecting the number to be close to 8,490, and this is because if you see the other income of the company, that is higher by around 17% to close to 2,883 crore rupees. So that has helped the bottom line of the company so far. Now, on the petchem side, if you see the petchem performance has disappointed as it was expected in this quarter after 8 consecutive quarters of strong performance. The EBIT from the petchem business in the fourth quarter has declined by around 3% to close to 7,975, and the refining business, now the GRM, that has come at around $8.2 here. Analysts were expecting a number of close to $8, so the numbers are pretty much in line. Now, the retail business, that has again outperformed in the fourth quarter. The EBIT for the retail business is close to 1,721 crore rupees, and the EBIT margins, if you see, it has expanded to close to 4.7% as against 4.3% what the company had reported in the last quarter. That is the third quarter of financial year 2019. So we have seen a good expansion on the retail side. Petrochemical, as expected, was weak, and refining has come in line with GRM numbers at close to $8.2 per barrel.
Okay, maybe you have a question or two, and I'm guessing Soumeet very quickly we'll probably need to do some more calculations, but our guests are with us, so let's get them in the conversation. Deven Choksi of KR Choksi Securities and Gurmeet Chadda join in as well. Gentlemen, both of you, as I said, thanks so much for joining in. Deven, your initial reaction, I know Reliance is a long-term story and things look hunky-dory on the longer-term front, but the short-term reaction, particularly the Jio ARPU is slightly lower than estimates, and the profit numbers, standalone profit numbers, falling for the first time in 17 quarters.
Yes, Niraj, I think there is, though I think result is more or less on expected lines, and I think the calculations on the GRM side also I think has come more or less on expected lines at $8.2 per barrel. Of course, I think the profits are slightly lower also because of the fact, in case of refining business, that the throughput process is lower compared to the earlier quarter because of the refinery shutdown. So from point of view of, I think, looking at the result, yes, I think more or less on calculated lines, nothing which is very surprising on the negative side. But at the same time, I think one is asking for growth in the business, and that is something which I think one will have to look out for. Petcoke gasification business, I think probably the contribution coming from that side is yet to be seen reflecting into the profits of the refining business. I think that is one thing for sure. Steady performance coming in from the petchem business, though I think on a sequential basis it is lower, but on anticipated line it is. So I think by and large it has come well. The Jio business, certainly I think one is asking for better amount of contribution from Jio, which is still not coming up. So to an extent, I think yes, it is a satisfactory result, though on a quarterly basis a slightly muted one, as I would like to summarize as.
So sir, for the Jio numbers, if you see the ARPU now, that has come in way below the analyst expectations. Analyst expectations were close to 129 rupees, but this has come at 126 rupees. So is that a concern for Reliance Jio, given the fact that the ARPU has been declining right from the start, right from the start of commercial operations for Jio? So is that a concern?
Well, I would think that I think more than the concern on the ARPU side, I think I am slightly more concerned about I think their implementation on direct to home, fiber to home. I think that is something which is not yet fully happening, because my take is that if you start having the fiber to home kind of an equation all established and it starts contributing to revenue, probably I think you would see a sharp jump into the collection, also including the ARPU coming in. But that is not yet happening fully, and that is where I think some amount of concern that I think in which quarter probably you would see the implementation of FTTH, as we call it as, getting reflected into the books of the company. So that would be one concern. Not completely concerned about I think the ARPU per se, because largely it is understood that the company is in the business of I think selling more data and bringing the customer into its network. So I think not fully concerned on that aspect, but the other area certainly I think a little bit more anxiety as I spelled out.
Gurmeet, the GRM's at lowest level in what I think three and a half odd years. So the bread and butter businesses have had some individual issues, and it's not working well for Reliance, at least in this quarter. What do you make of the results?
So Niraj, I think it was on expected lines. RIL's ability to process both low and high quality, crude is well known. Also, what is often not discussed is their trading relationship to get crude at a very competitive rate. So if you look at the Singapore benchmark, it's still almost a 500 basis points. So if you relatively look at it, it's not that bad and probably along on expected lines. I think what concerned me was that today the consumer-facing business, which is retail and Geo, contribute about a fifth of the profits, and that is where as Mr. Choks is also saying, you would like to see some uptrend, that contribution going up. While retail has delivered, the ARPU at 126 basically tells you that they continue to add customers more at the lower end to the slightly lower middle end, of the base, and the defense of the middle and the higher end by Airtel and to a certain extent by Voda Idea still seems to be intact. I'll be more interested in looking at from a fundamental perspective is your net debt to EBITDA. That's 3.7 times. So the stock actually had run up more on reasons of Aramco picking up stake and talks of asset monetization. I think that's where the real trigger lies, and how much growth you can get from the consumer facing business. So I think it's a stable number, but considering the run up in the price, there could be a bit of a disappointment. But the disappointment is more if somebody wants to come from the 3-month view. I think with a 3-year view, I think the story still looks good.
The R cluster development progressing as per plan. The acquisition of Den Networks and Hathway, something that Deven was referring to as well, of course, completed. So those couple of points being done as well. Deven, if indeed the news flow this morning on Bloomberg Global as well as in Times of India turns out to be true, isn't it admission of the fact that there is pressure in or cash pressure in businesses, and therefore Reliance needs to do stake sales in order to keep on funding this, and therefore we might be nearing the low end of the telco rates? Or do you reckon that this is more a salvo fired by Reliance that let's sell stake in the bread and butter business and have more money to continue pricing the competitors in the telco business out of the market?
So Niraj, my understanding on the subject is that on the core business side, they already expanded the capacity in petrochemicals and polymers. I think the polymer business had a challenge in this particular quarter, but otherwise the capacity is fully expanded to 40 million metric tons. So that is one thing which is very positive. The refining business is going to have the bottleneck as far as the capacity is concerned, because they are already running at around 68 to 72 million metric tons kind of a throughput in a year. So I think that is one area they are fully exhausted. In the core business, I think till the time they expand the capacity further, probably volume rate growth will not come. What is more important is that petcoke gasification contributing to the margin, and that is something which one would like to see in which quarter it starts reflecting into. That is what I think I would keep an eye on as far as I think near term outlook on this particular subject is concerned. On the consumer facing businesses are concerned, the retail business as well as the Geo platform, particularly in case of Geo, I think my take would be that on one side I think we are looking at integration of all the network into one, and probably see how the customer base is expanding and contributing into the higher revenue. That is one thing which is implementation related issue. That is something which we'll have to look at it. But the near term story to me appears to be that Reliance would probably start monetizing some of their assets, make it, I think, offloaded from the main balance sheet, including, I think, the fiber and the tower business on the consumer facing business. And the, I think, not would be surprising, I think, if they would probably, I think, invite the partner for expanding the capacity from 66 million to 100 million tons on the refining side. So certainly I think they would be monetizing, and that would be the near term trigger points for Reliance going forward. Keep an eye on that aspect. Otherwise results are going to be driven with the kind of numbers that we are talking about on the volume side as well as on the margin side in the coming quarter.
So as you were talking about the part where the company needs to now hive off their tower and fiber assets. So if you see the total debt as of now for Reliance Industries, now that is the consolidated debt, it's close to 2,87,000 crore rupees, and its leverage ratio, that is total debt to EBITDA, it has moved up to around 3.43 times. So do you expect the street to take this high number of debt as a concern for now? Because so far we haven't seen any news or any development from the part from where we are expecting the company to hive off their asset and to lower their debt. So how do you see this debt picture of the company? Secondly, how do you expect the stock to react on Monday, given the fact that we had seen a good move coming in on the back of the Aramco news today?
So yes, certainly I think my expectation is that I think deleveraging of the balance sheet and capitalization through monetization process is the order of the day. They will do it, and that is what I think I am keenly looking at. Whether it is happening in this particular quarter or whether it is happening in the second quarter, I do not know, but I guess I think it is in the offing, it should be happening. Otherwise I think the growth is affected for sure. So company is fully aware about that aspect. That is what my understanding is, and various report also suggests so. So I think I would like to believe that. As far as the reaction to the stock price is concerned on Monday, probably the market was not expecting any dramatic result improvement in this particular quarter either. So only from the point of view of news flow, the stock price has moved up. Might be, I think, if the confirmation happens on the monetization stroke deleveraging of the balance sheet happens in due course of time, probably the stock price would react accordingly. I am not expecting many major upside or downside in Reliance's stock price at this point of time. Rather, I would think that any correction in the stock price would invite more buyer into the company, because as I said, the story unfolding is the capitalization and the monetization of the assets at this point of time.
Okay, the other aspect to look at, of course, for Reliance Industries is that while the leverage continues to pile on high, if they manage to do some asset sales, then what happens to that part of the picture, and does the market take some relief or sigh of relief from there? So that's the other key piece that you need to monitor. The question, though, going ahead would be that after the stock having done what it has done on news bits and on reports and not necessarily announcements, can Reliance as a stock do more? This result will definitely not let you do that. If anything, I would believe that the market will look at the ARPU number and not be happy. The expectations was that the ARPU would come from 130 to 129. It's coming at 126. You could argue that it's not a very steep fall. It's still in that range as well. But if you look at what it has done, as the chart shows, from quarter 2 FY18 to quarter 4 FY19, there has been a substantial fall in ARPUs. And some point of time, the market would want to ask a question about how long can this continue. Gurmeet, that's the other piece, isn't it? The leverage that Reliance carries on its balance sheet, and the fact that it need not necessarily be doing whatever it is doing with, or planning to do, or maybe planning to do with Aramco because it is available, but because it needs to.
Agree with you, Niraj. And if you see the cash burn, last quarter was, while I'm yet to see this quarter cash burn, was about 14,000 crores to generate that kind of a number for Jio. And if ARPU continues to get lower, it doesn't really help your cause considering the run up in the price. Although I'm a little impressed with the retail business, Niraj. If you see, it's been another quarter of 20% plus growth, both in EBITDA as well as in the footfalls. So while we only see revenues, in the retail business, kindly the business they are in, I think that's also seems to be. So I think it's a mixed bag in the consumer pack with retail, both on margin, on revenue. Revenues are also high. EBITDA was good, footfalls were good. And here, while the subscriber base increased to almost 307 million, you had ARPU getting lower. I think the street was expecting 129, 130. Also, if you see the debt from about $14 billion in 2014 is now 45, $46 billion, which your colleague was pointing out. That's almost like 2.9 lakh crores. So I think if you take around, if the Aramco stake sale happens, and the buzz is at about $15 billion for a 25% stake, and if you take another $10 billion on the asset monetization, which is your, so that could reduce your debt by 55-60%. And I think that to me is a bigger trigger. And also I think we'll have to watch out. They would need money to get into the e-commerce bit also. I think that's something also which the street would like to see. So my sense is it's a bit of a muted number. Had the stock not run up too fast, it would have been okay. Would be interesting to see on Monday.
So what do you expect though on Monday? A bit of a pullback?
I think so. It looks like very, very difficult to, you have a non-transaction day tomorrow, and it's also a function of how the global markets would be. So for a stable number and a run up in the price, generally typical reaction is a bit of a pullback. That's my and that can be used to, if it's a large pullback, it can be used to maybe add something on dips, because as I said, I think on a 3-year basis it looks good to me. I think it's my sense is that the ARPUs will come back, because the industry has seen consolidation. Retail continues to do well, and if this stake sale deal happens, I think it's going to give them enough war chest to continue with the investments in the consumer facing business.
Yeah, I think that's well put though, but I would reckon that they need it for the telecom business to continue pricing people out, or the competitors out, or trying to do that at least. And as Gurmeet rightly said, for the e-commerce business, that it's a money guzzling business. Just one final question, Gurmeet, you mentioned retail, and that retail numbers have really jumped up. Year on year consolidated numbers nearly double, about 10,000 crores, maybe less, but nearly double there. Just one quick 30-second view there. How do you expect that piece of the puzzle to move for Reliance?
So I think that will Niraj continue to do well. My visit to their even stores gives me a lot of comfort. As I said, the footfalls are growing 21-22%, and I think that is very, very encouraging. We saw even Shoppers Stop in December numbers, by this quarter numbers reported slightly better number. So that to me is a good news, obviously, and the fact that last quarter they were helped by new store launches as well as the festive season sale. Now, if you repeat a Q4 number on back of a festive number, which I'm talking about quarter-on-quarter numbers, I think it's very impressive. So I'm positive on that side. That's why I said it's a consumer side is a bit of a mixed bag, and retail might be the saving grace for the stock.
We'll leave it at that. Gurmeet, Deven, thank you so much, gentlemen, for joining in today and giving us that perspective. Reliance Industries as a stock, the numbers are subpar, you would have to say, compared to what was estimated, especially on the Geo front. Retail doing okay. The stock has run up in the build up to the results, so maybe expect a bit of a pullback as well. But we are off on Friday, so it'll be a factor of what a lot of other global markets do and how the sentiment is on Monday morning. Thanks so much for watching this broadcast.